Hello, everyone, and welcome to the big show. This is Investing and Trading Live, sponsored by Online Trading Academy. If you're a first-time listener, thank you for stopping by. My name is Josh Lilquist, and we are happy to have you with us today. As always, once again, back in the saddle, Mr. Blue Man Group, my good friend and my good pal, Mr. Al Connickson. Al, how are you doing today?
You know what? I'm doing really well. When you call me Blue Man, I think people think I'm sad, but I just happen to be wearing my favorite blue shirt.
You're always a happy guy. You're always feeling
I'm
good,
happy. Yeah.
looking good, and you know what? Let's have a little fun here talking about the financial markets.
Yeah, we always do.
There's a lot of great moves in these markets, and when we talk about great moves, it's just movement in any direction. And there's some mixed emotions out in the market this week. Before we talk about the market, our sponsor, Online Trading Academy, 25 years, actually 26 years, teaching people just like you how to trade and invest if you're brand new to the markets or if you've been trading for 20, 30 years and just looking for some more consistency. They have education and content to help you make smart investing decisions. And we're going to talk a lot about those different concepts here today on the show. As I had mentioned, there's a mixed bag that's kind of going on right now. The S&P 500 is kind of, we'll call it range bound, Al. It's kind of stuck between that 41.87, 40.47 area, and it just doesn't really know what to do. So we're seeing some opportunities there with different option strategies. The NASDAQ actually showing a little bit of strength. So that's kind of a little catch-22 if we have different, markets doing different things. And we have the Dow showing a little bit of weakness. So what is going on? Typically, they like to kind of follow each other or mirror each other somewhat. But when you have all three doing something a little bit different, that just means confusion within public.
Yeah, it shows indecisiveness by the market. And, typically, as you mentioned, those three indexes move the same way. Things have changed a lot, Josh, in the last few years. And the way people approach the market, the way that you trade and invest now, probably is going to have to be different than what you did before. Basically, what you did before, what the majority of the retail public did, retail traders and investors, isn't working and isn't going to work going forward.
I think a lot of people are seeing that now. They're like, oh, yeah, this buy and hope thing doesn't work anymore. And they're like, what do I do? But they're quitting.
Yeah, well, and the big run-up in the market that we've seen over the years from 2009 really has been Fed-induced. Lower interest rates, basically zero interest rates, and just trillions of dollars being pumped into the market by the Fed. That boosted the stock market. That boosted equities. Good companies, along with the bad companies, were able to basically borrow at zero and put money into either buying back their stock or maybe investing in their companies. That's changing now. The Fed is doing the opposite. And some things have happened in addition to that I think people need to be aware of. And this may come across as being bad news, but as always, we want people to know that no matter what is happening, there is always an opportunity. If there's a crisis, there's an opportunity that will come out of it. So the key is to be educated to the point where you know what to do. You're ready to act regardless of what's happening. And here's some of the issues that we're concerned about. Right now, the debt ceiling right now, that still has not been finalized. There's an issue there. That could cause a huge move in the market. We still have high inflation, even though the rate of growth in inflation is coming down. We have an inversion in the 3-month 10-year. That is usually a precursor of inflation, I think, of a recession. I think every recession has been preceded by that. But one of the things that is really of concern right now is market breadth. And by that, I don't mean how the market smells.
Oh, I was going to say, did you brush your teeth today, Al?
It is who's participating in the market growth.
It's
the S&P,
BREADTH.
There's a D in there. That is correct. And what we're finding is that, and the same thing kind of happened when we came out of the recession back in 2009. There's a small handful of stocks that are moving these markets, the S&P and the NASDAQ. And they're companies that are familiar to all of us. Apple, Microsoft. Apple and Microsoft alone make up almost 15% of the S&P 500's value. Now, we've had companies like Meta, the old Facebook, NVIDIA, Alphabet, Google, Amazon, Tesla. Those stocks are up 25% to double what they were at the beginning of the year. So those are the stocks that have been moving this market.
Well, you look at Meta, Al, it was at $89 per share back in October of 2022. It's up 170% since then.
That's a big move.
That's a big move.
When you think about the S&P 500, there's 500 companies there, and if only a handful of them have had returns like that, it means the majority of them are either down for the year or basically flat for the year. And that's what I mean by market breadth. What we need to see to make sure we're going to have a good, strong bull market, a big, strong move up, is that breadth changing. We need to have participation by more companies. Because this happened before. The tech stocks, those companies I just mentioned, they drove the market before, but then they went through their own recession, and it took the market down. 2022, the big part of the market drawdown then was because the tech stocks had big moves down, 60, 70% down. Now they've come back, roaring back, and that's what people kind of assume, that the markets are in good shape because we're seeing it either flat or up a little bit.
Yeah.
But if you go back 2 years, go back to April or May of 2021, that's pretty much where the markets are trading now.
Yep, and it's crazy. You brought up Apple. They're almost at the highs, all-time highs, is what it was before, close to $170 per share.
Right.
And you mentioned that market breadth. There's a lot of stocks that aren't pulling their weight. You look at PayPal. They're down 80% from their highs. So we have a mixed bag. The S&P 500 is doing something different with the NASDAQ. The NASDAQ is doing something different than the Dow. And the stocks within those are just doing totally different things, which is kind of, maybe a little frightening for some people.
Well, and what it means, Josh, is that what people used to rely on, which were the index funds, the S&P 500, the ETF, the SPDR, or mutual funds that tried to mimic the S&P 500. What it means is that you are investing in something that has a bunch of losers in it. And if you could be selective, which comes with the proper education, maybe you would have looked at what we have seen in the price charts of companies like NVIDIA and Apple and Microsoft. The institutions that are buying those companies that are moving the price, those companies didn't have these big moves up just because they're good companies. They had that move up because big buyers were buying their stock, moving the price up.
Yep.
And if you can identify where they're doing that, that allows you to participate with them,
Correct.
Which is what you want to do. If you're following the index, you're probably not going to do well.
Yep. And nobody else wants to be associated with losers either. And you mentioned, the right education, having the right tools to make smart investing decisions. And we have investing classes locally here at the Academy. If you want to come to one of these classes, just text the word investing to the number 210 for 2 seats, local here in Bloomington. Text the word investing to the number 210 for 2 seats for an investing class to see how you make smarter investing decisions. Coming up next, we're going to talk about different concepts for income strategies and wealth strategies. So stay tuned. This is Josh and Al, Investing and Trading Live. We'll be right back.